of coffee or tea while I take you through the top headlines on the Economic Times as well as the Times of India. And the top story undoubtedly on all the newspapers is the lockdown 3.0, which has been imposed from May 4th onwards, but with some sort of relaxation. But before I get on with the top headlines, let me first take you through why are newspapers safe. Definitely, we've all heard that newspapers are not safe and there's some buzz and rumors around it. But let me assure all of our viewers that newspapers are indeed safe. You have Economic Times put out that information every single day in the newspaper saying that our newspapers are safe. The public health specialists have actually said that the fears about newspapers being unsafe is totally unscientific. It is not rational. They're saying our presses follow stringent health protocols. Our distributors wear masks, gloves and use all safety precautions while delivering that newspaper to you. So if you want your copy of Economic Times, of Times of India, please log on to www.wantmypaper.com and get the copy of your pink paper and the Times of India right away. But before that, right, I am here. I will take you through the top headlines, and definitely it is the lockdown 3.0, the conditions applied. That is the top headlines on the Economic Times. What else is making news in the paper this morning? And that is the Arogya Setu app is a must for all the private sector workers. You have the curbs on e-commerce upset Amazon's cart in India. Definitely the company posted good set of revenue globally, but India business was impacted the most due to COVID-19. You have Election Commission relief coming in for Uddhav Thackeray. The polls for the Maharashtra Legislative Council will be held on May 21st. Next, we have government to call 900 million people to check for virus symptoms. Remember, today they have actually reported the biggest single-day spike in the COVID-19 cases across India. Talking about the car sales, it's a nil car sales coming in for the month of April as expected due to the lockdown. The auto companies are facing the pressure. Zero sales coming in for all auto companies in the month of April. RBI will be meeting the PSU bank chiefs, bank chiefs on moratorium for the NBFC sector. Prime Minister also met yesterday the representatives of power, aviation as well as labour sector to take stock of the situation around those sectors. You have Trump that has threatened new tariffs on China in retaliation for the virus. Trump said yesterday that there is evidence that ties the virus to a Wuhan lab. So that's also something that rattled the markets yesterday. You have vaccine leader that signed a deal for 1 billion COVID-19 doses a year. So that's the top headlines from the Economic Times. But let me take you through the top headlines on the markets front coming in from the Economic Times this morning. And SEBI has asked the mutual fund guys to resume for information on holdings in unlisted bonds. Talking about the NBFC and MFI's operations, they will resume fully in green as well as orange zone. You have the UPI transactions that's taken a big hit due to the lockdown. It's seen the biggest monthly plunge, the UPI transactions. You have forex reserves that has fallen by about $113 million to about $479 billion. And talking about the Wall Street, like I said, the Trump's threat coming to China has rattled the Wall Street. Its sell-off has resumed on the US market. So need to see how that ripple effect that we'll have on all the markets. Let's move on to the top corporate stories this morning on the Economic Times. And staff of all top public sector units will be resuming work from home. Will soon work from home, most of the staff of the public sector units. You have partial easing that won't amend the fractured supply. Remember, lockdown 3.0 has been introduced, but some conditions apply. There are partial relief coming in for the green zone as well as for the orange zone, and certain reliefs only coming for the red zone. Containment zones are not going to see much relief at all. So that is won't do much to basically mend the fractured supply. Nil sales, like I mentioned, coming in for the auto sector due to the lockdown. You have High Court that has restrained ICRA from downgrading ECL financial ratings. And then you have the smartphone shipments in the month of from Jan to March quarter, that is Q4. The smartphone shipments has seen a decline of about 13%. Remember, that is when the global economy also started slowly getting into the lockdown mode. So those are the top headlines on the corporate market front on the Economic Times. But let's get on with the lead story on all the newspapers, be it the Economic Times or the Times of India. That is the lead story, lockdown 3.0, but with conditions applied. Definitely, we have opened up, but not unshackled. That is what the Economic Times is saying this morning. They're saying that the government has opted for caution. They've extended the lockdown for 2 weeks with a partial relief. Remember, most reliefs are coming in for the green and the orange zone. If you talk about the zones, we are divided into 3 zones. That is the red zone, the orange zone, as well as the green zone. The red zone, there are 130 areas in that particular zone. You have the orange zone, which has 284, and the green zone, where you have 319 of them that are in that particular zone. But to talk more on this, what is the easing, what is going to look like, what's the contours of lockdown 3.0, I'm joined by my colleague Nayantara Rai. Nayantara, good morning. Lockdown 3.0, but this time around we did not have the Prime Minister come out and announce that. You had the Home Ministry notification on that. So take us through all the details of the lockdown 3.0.
Well, like what a lot of industrialists are also saying, and we've got some of the biggest names on ET now, that yes, while lockdown 3.0 continues now till May 17th, it's also a partial opening of industry. Yes, we can look at India being divided in 3 zones, but outside of the containment zones, and I think going beyond expectations of India Inc., a lot of economic activities also been opened up in the red zone. I'm sure we are talking about in the newspaper show that very great graphic pointer that has been put out by the Economic Times today front page, when in one snapshot tells you what's allowed in the green zone, what's allowed in the red, what's allowed in the orange. Let me tell you what's not allowed in any of the 3 zones. No beauty parlors, no barber shops, no movie halls, no malls. None of that is allowed. Irrespective of whichever zone you are in, the timings to be out is 7 a.m. to 7 p.m. That's irrespective of the color of the zone. Then, there are certain guidelines. But what's important to note is factories are being allowed to open with social distancing. Offices are being allowed to open. This is in the red zone, 33% capacity. Cab aggregators are getting a chance to be back. If you look at 4-wheelers, in the orange zone, you can have a driver +2 like in the green zone. So, a lot of distinctions that is being put out over there. And for a lot of you that have been missing your alcohol and tobacco, if you're not in the red zone, if you're in orange and green, you can go buy liquor. You have to maintain social distancing. Only 5 people are allowed in a shop. Same for tobacco, for selling cigarettes, etc. In fact, the state of Goa is already red flagging that it might run out of booze in one day.
Yes, exactly. Nayantara, that's one of the top headlines this morning that's come out, that Goa is actually saying they're fearing that they will have a shortage of supply on back of the ban in the green and orange zone being lifted. But let's talk more about what the industry participants are actually saying. If you look at Economic Times, the industry reacts cautiously. That's what they are saying. The industry leaders say that they understand the government's predicament, but many have said the partial relaxation of lockdown won't be enough to actually repair the fractured supply. So what are your, with your interactions with the industry participants, what's the sense that you are actually getting?
So, we've had some of the best industry experts on ET now. Dr. Pawan Goenka from the Mahindra Group. We had Niranjan Hiranandani, a stalwart in the real estate sector, but also the president of Assocham. We had CII President Vikram Kirloskar, Kiran Majumdar Shaw of Biocon. So first of all, finally relief also coming in that factories will allow to be open. Like I said, what's happening in the red zone outside of containment zones has industry pleasantly surprised. I don't think any of them expected the red zone to be opened up to the extent it has been. So having said that, while industry has welcomed it, they are all waiting for this fiscal package. Ladies and gentlemen, what we can also tell you is that what we're picking up with the finance ministry, that even today you're unlikely to see any announcement for a fiscal package. Now, having said that, while industry is waiting for it, what happens next is, and all eyes are going to be on the states. The Home Ministry has done its bit and it's come out with what's allowed, what's not allowed, the do's and don'ts. But now it's going to be up to the states to come out with their guidelines, which need to percolate all the way down to the SHO level, to the district magistrate level. They're all waiting for that so that business continuity can take place for whatever's already allowed, and new activities can start from Monday morning. So the onus is now going to be on the states to act quite fast, disseminate information right down the value chain. Industry doesn't want to open up 100% at the moment either. There's not enough demand. And I think that's what they're looking at Team Modi and the finance minister to start announcing measures for demand. Whether it's going to be a new age, new deal, what we saw post 1929 and the World War II, or whatever it is, the fiscal package is certainly needed now to create demand. And that's what industry's biggest expectation is. And I think that in the absence of fiscal package, they will continue to tread with caution. They will continue to be very cautious with their statements, holding back and saying it's not enough.
All right, exactly, Nayantara. That's what the industry is actually waiting for, a fiscal package to come out from the government. But thank you for taking us through all the updates on Lockdown 3.0. Have a great weekend. But let me take you through a small gist that's there here. The code of conduct that will continue through the Lockdown 3.0, and one of the important one that is there is the Arogya Setu app that the government has made mandatory for both public as well as private sector workers. So that's an addition when it comes to your code of conduct. Definitely you have to wear mask at all times, you have to maintain social distancing, and there's no gathering of more than 5 people. So apart from that, Arogya Setu app part is the newest one that the government has actually notified yesterday. But let's move on and let's talk some more about Lockdown 3.0 and the impact that is having on the e-commerce sector. You had Amazon that came out with their earnings, and definitely the curbs on e-commerce upsets the Amazon cart in India. That is also on the front page of your Economic Times. And what does this basically talk about? The Amazon's revenue definitely has seen a sharp spike in Q1, but the India business impacted the most due to the lockdown. But yesterday's notification, let's talk about e-commerce, and the government has said it's a free run for e-commerce in green and orange zone. Only in green and orange zone and not in the red zone. In the red zone, only essential commodities is being allowed by e-commerce players and not non-essential goods. Remember, non-essentials goods in the metro areas, which is actually the red zone areas, the demand for those goods are quite high, and that has actually upset the e-commerce players as well. Let's dwell more into it and understand what impact will this particular move actually have on the e-commerce players, which is that there's a free run for e-commerce in green and orange zone, non-essentials still barred in the red zone that accounts for bulk of their sales.
Yes, the government in its notification said that e-commerce companies can only sell essential items in the red zones, but this has led to a huge confusion as the companies are reading it as they can deliver both essential and non-essential items in green and orange zones. So this seems like a whiff of relief for the e-commerce company, although most of their businesses are aggregated in the red zones or in the areas which are currently listed under the red zone. However, the Confederation of All Indian Traders has objected to this reaction coming in from e-commerce companies, and they have said that the companies are misinterpreting the government's decision, and they are sending across rumors, as the government has only said that essential items will be allowed to be delivered in the red zones, but they have not said anything about non-essentials being allowed in green and orange zones. So yes, this seems to be a confusion when it comes to e-commerce players and the association and the Confederation of All India Traders.
All right, Parisha, thank you for joining us this morning, giving us the details on this particular story. On the Economic Times, they're saying it's a free run for the e-commerce players in the green and orange zone, but definitely some more clarification is needed on that front, and we will definitely see it in the days to come by. But let's shift focus and let's turn pages to page 5 on the Economic Times, and just give me a moment while I get onto that page. Page 5 of Economic Times talks about the auto sales, and yes, definitely it's a nil local sales shown by the auto companies in the month of April. Yes, it was expected due to the lockdown. The auto companies are going to face this particular scenario where they will have zero sales. But what does it actually mean? To take us through the details, I'm joined by my colleague Karunya Rao this morning. Good morning, Karunya. Nil sales coming in for the auto sector, something that we had expected actually.
Well, this is probably the first time ever that all of the OEMs have reported zero sales for the month gone by, and this is obviously owing to the massive nationwide lockdown that we've been witnessing for over 40 days now. Maruti had zero sales in the domestic market as expected. They've had a shipment of 632 units, however, for exports, which was undertaken with all the due precautions and requirements fulfilling from the Mundra port. M&M says they've sold 733 vehicles in the export market. Domestic sales, of course, were zero, but they were hopeful of opening up of dealership and supply as well. Do remember their commentary came in before the lockdown was extended last evening. So let's see how that changes. But even Dr. Goenka told us on ET now that he does see it as a partial lifting of the lockdown rather than extending the existing one. Farm equipment sector commentary for Mahindra and even for Escorts has been fairly optimistic. They're both betting on good Rabi output, good monsoon predictions. They're betting on aggressive procurement of crops, indication of good crop prices as well, and reservoir levels as well, which could augur well for both of these OEMs which manufacture tractors essentially. Now Royal Enfield says that facilities across their Tamil Nadu regions were closed. Entire supply chain including dealerships was shut because of the complete halt in operations. They only managed to sell 91 units in the month gone by. Like I said, Escorts, their commentary for the growth was very positive, for recovery is fairly positive. This is tractor segment is the one which will recover faster than others, than several others to be exact. They've sold 705 tractors because of the closure in dealership in most areas. But at the same time, ACMA, CM and FADA have issued a joint statement saying that requesting the government to allow OEMs, suppliers, dealers, workshops, regional transport authorities to open up, and they've put the thrust on how akin the industry is to essential services, how badly right now it's under pressure because of the existing slowdown that was already there before COVID-19 also hit. So they should be allowed to function as has been done in the case for cement, for steel sector. So they've filed an appeal. Let's see what happens. But for now, auto sales numbers definitely nil for the domestic market in the month gone by.
Thank you, Karunya, for taking us through that particular story on the April sales. Nil sales registered by the auto companies, definitely a first in the history. But let's move on to the page 6 of the Economic Times. And there you have the story, RBI to meet bank chiefs on moratorium for the NBFCs. Remember, lenders including SBI as well as PNB, which were earlier not in favor of actually extending the 3-month payment holiday to NBFC, may actually review their decisions now. The central bank has also called for a separate meeting with the leading NBFC firms as well as microfinance firms, along with their industry organizations, which have been pleading the authorities for actually getting moratorium benefits from the banks. So this is one of the important headlines that we will be tracking all through the course of the day. But to talk more on this, to talk what exactly the NBFCs have been wanting, what the RBI may take up in this particular meeting. I'm joined by my colleague Neha Tyagi. Good morning, Neha. A meeting that we need to watch out for, where RBI will meet the bank chiefs. So take us through what will be likely on the agenda and why this meeting is important.
Well, on the agenda, from what we understand, is, of course, like you said, the extension of moratorium benefits to non-banking lenders that will include your NBFCs. If our viewers remember, on March 27th, RBI had extended a moratorium of 3 months on EMIs of term loans as well as interest and working capital payments for all borrowers. They had asked banks to come up with a board-approved policy for implementation and execution of these orders. However, like you said, the banking community or the banking sector has been divided over this issue. While some bankers have gone ahead and extended these benefits to their NBFC lenders as well as MFIs, bankers like SBI and PNB have been averse to it. But now that the Supreme Court has directed RBI to ensure that these benefits are extended to all the borrowers in letter and spirit, the bankers will have to review their decisions. If you look at NBFCs, while they have extended moratoriums to all of their borrowers, they have not received the same benefits from their banks. So that has created a liquidity mismatch, which has put them under severe stress. And now for that, the RBI will have a discussion with the bankers today. We understand that the RBI will also separately meet the NBFC and MFIs who have been asking the RBI for a solution to this. But if you look at what has been happening, bankers do seem risk averse. Bankers do seem averse to helping out NBFCs. For example, if you take the TLTRO 2.0 that was extended by RBI, the facility specifically for smaller NBFCs and MFIs, there also we saw a very lukewarm response from the bankers in terms of availing those benefits and in terms of extending those benefits to the NBFCs and MFIs. So they are definitely risk averse. So it will be interesting to see what comes out of this meeting. It is a very important meeting, and this issue has been discussed ever since the directions had first come in from the RBI, and we will track it for you and we'll bring you the latest details.
Thank you, Neha, for taking us through that important story where the RBI will meet bank chiefs on moratorium extension for the NBFCs. Remember, like Neha also mentioned, that the banks are actually risk averse. They don't want to lend because of the risk that it carries. So let's wait and watch and see what's the outcome of that particular meeting where RBI will meet the bank chiefs. But let's move on to another story that's there on the page 7 of the Economic Times, and that is Prime Minister Narendra Modi has taken stock of the power, aviation, as well as labour sectors, the sectors to be revved up for action to put out for the economy, to put economy in the recovery mode. So what did the Prime Minister talk about with these particular sectors, and how are they making a game plan to get the economy back on track? I'm joined by my colleague Ashna to take us through the details of the meeting. Ashna, Prime Minister has met with the power and aviation sector. So what's the details coming out from that particular meeting?
Well, yes, Prime Minister Modi has started taking stock of the impact of coronavirus sector-wise now, and the first 3 sectors that he has discussed in meetings yesterday have been labour sector, power sector, as well as the aviation sector. Now, with respect to the labour sector, of course, the importance of wage labours and everything was discussed. But with respect to power sector, he had called upon the power minister, the finance minister, the minister of finance for state as well, and had discussed long-term measures which we know are key to the power sector, which is reeling under huge issues, especially due to the performance of the distribution companies. So, of course, the steps to enhance sustainability, resilience and efficiency were discussed in the meeting. Other than that, Prime Minister Modi also touched upon the issues of ease of doing business, the propagation of renewables, the flexibility in support of coal as well was discussed. Other than that, the public-private partnerships, boosting investment in power sector were the other key things that were discussed. Now, moving on to the meeting that happened with the aviation. With respect to the aviation sector, the key things that were discussed were the importance of generating more and more revenue, as well as to bring in more efficiency at the airports. In fact, the officials at the meeting were also asked to expedite the process of handing over 6 more airports which are being made by the public-private partnership. Other than that, the Prime Minister also yesterday reviewed the eDTCA project. Now, this project which aims to bring in more transparency at the DTCA office and thereby helping all the stakeholders by reducing their processing time with respect to various licenses and permissions. So yes, these are the key things that were discussed in yesterday's meeting with the Prime Minister.
Thank you, Ashna, for taking us through the details of the meeting that the Prime Minister held with various sectors. But let's move on now to the top headlines on the Times of India as well as the Economic Times on COVID-19. And definitely the top headlines there is that the government has extended the curbs for 2 more weeks with some easing. Apart from that, you have another top headline, that is the liquor and cigarette sales will resume as well. You have India that's seen a record to 2,333 cases in a day. 26% of the deaths in Maharashtra had actually no health condition. 29 families account for 25% of the Dharavi cases, a cause of concern coming in from Mumbai in that front. Despite the lockdown, 14 companies to hire from IIT Bombay. You have 3 cops outside Uddhav Thakere's residence, that's Maharashtra CM's residence, that have tested positive for COVID-19. You have COVID-19 that has not peaked out in Maharashtra and Mumbai. That's the word coming in from the doctors. That is not yet peaked in Maharashtra and Mumbai. And Punjab blames Maharashtra after 215 pilgrims are tested positive for COVID-19. So those are the top headlines coming in from the COVID-19 front on Times of India as well as the Economic Times. But let me now take you through the top headlines that's there on the Times of India. Definitely, you have the lockdown that has been extended for 2 more weeks, being the top headline on the Economic Times as well. I beg your pardon, on Times of India as well. Next story on the Times of India is the 5 special train will ferry stranded people. More are expected.
Introducing ET Prime by the Economic Times. A premium experience with exclusive stories for leaders of tomorrow. In the near future, virtual reality will transport you live to the news.